Ramesh Iyer, Managing Director of Mahindra and Mahindra Finance joins us. Ramesh, good morning and thank you for joining us. Yesterday I distinctly remember when I was wrapping my day, a flashcom came on ET now that the board of Mahindra and Mahindra Finance is planning to pass an enabling resolution where you can raise up to 45,000 crore. Am I getting my numbers right? Why do you need 45,000 crores?
No, this is a cumulative number. If we already have up to 25-30,000 crore resolution available, and then we need to enhance it to the next level. So it's a cumulative number and not 45,000 crore per year.
But 45,000 crore, even a cumulative number, is a big number. At a time when industry is contracting.
Yeah, it is.
So why do you need that much money is my follow-up question. Let me ask it simply and directly.
No, it's as simple as that. Last year, if you see, we had a total disbursement of what, close to about 27,000 crores or so. And we don't think, even if the industry is not growing, we don't think that we are talking of not able to do any business out in that market. So even retaining market share would need that kind of a money. So I think that's our normal business. There is nothing unusual or abnormal about this size of money that we are talking of. Now, currently we run a balance sheet of about 33,000 crores AUM, and if you kind of collect about 15-20,000 crore per annum in the form of our regular collections, and if you have to maintain our even normal disbursement that we have seen the last few years, I think we need that kind of money.
Ramesh, auto sales for the month of April did show some improvement, although I can't say across the board. What's your outlook on how auto and UVs, tractors, cars, CV space is going to go ahead, move forward?
I think when we've tracked the customers coming into the dealerships, we've also felt April, May, the footfalls have been high, and but it's taking time for really conversion of footfall into real sales. So it's possibly too early to say that the numbers are moving up, and one should also remember that sometimes we compare these numbers to the first quarter of previous year. Some of the products weren't doing so well then, and therefore I would still think that the real test time would be the festival time after we finish up to August. We will have to see how the whole thing really turns out, but sentiments definitely seems to be moving positive, and the footfalls are increasing. Discounts are continuing in some of the products, so that's further attracting customers. I think in addition, there has been some discussions at dealerships I hear about, will the excise duty concessions which were offered, will they kind of come off now, and therefore will the price of the vehicles go up? So I think all of this put together is kind of moving some numbers up, but it's too early to say that things have changed.
Marketing stocks are still correcting. I'm just going to mark BPCL, a fresh price volume breakout. So oil marketing stocks, a disguised correction has kicked in. HPCL, BPCL, IOC. Of course, BPCL is the strongest of the lot, so on a relative basis, it is correcting the least, or it has corrected the least. Ramesh, there is one problem for Mahindra and Mahindra financials, and you've been quite vocal about it, which is South. Have things changed for your southern business in a meaningful manner?
Sorry, I missed your...
No, the problem for Mahindra and Mahindra Finance, and you've been very vocal about admitting it, is your lending book in South. Are things looking up there? Have things changed? Has the scenario changed in a meaningful manner?
I think if you look at Kerala and Karnataka, definitely they have changed, and we do see much better actions than ever before. As far as Andhra is concerned, not too much has changed, but beginning to happen, but Tamil Nadu has not yet changed for us at all. So I would still think that South is a mixed bag with only Kerala and Karnataka showing some meaningful improvement, whereas Andhra is in the waiting, and both Tamil Nadu is also in the waiting.
Ramesh, you said the cat amongst the pigeons when you declared your Q3 numbers. Your NPAs shot up. However, for Q4, your NPAs were well under control. What is the trajectory going forward?
See, I mean, before we really talk going forward, I would like to clarify, the NPLs are an outcome of market behavior from different regions. So always in the past, when the NPAs are from north and west, one would see a correction in the third quarter because the harvest is in the third quarter. Whereas if the NPAs are from south, the harvest is in January. And therefore, somewhere people missed out to kind of imagine if NPAs from south, which we've been saying continuously, therefore the whole delay between third to the fourth quarter, and it's otherwise business as usual. Nothing really is changed in terms of profile, product, geography that we work in. And as far as going forward is concerned, again, we've always said this, we don't really much worry about what really the ultimate NPAs are. We surely monitor our credit losses. So historically, if you look at this company's credit losses, they've always been in the range bound anywhere between 1.3, 1.4, not going beyond 2%, because these are all collateral backed lending. At the end of the day, you give more time to the customer if there are some difficulty in cash flows. But if somebody cannot repay either circumstantially or intentionally, the collateral comes back and you're able to trade on them. So one should not really look at just NPL as one number and kind of look at, is things going right or wrong. Ultimately, collateral backed lending, that's the advantage of being in such lending.
Ramesh, just hold on to that thought. I want to mark just two stocks, and oil and gas is especially in focus today, especially given the kind of deep cracks that we've seen in the last two trading sessions on the OMC basket. ONGC, by the way, that snapped its two-day fall. The stock is holding out and finally seeing some green, and that's the case for HPCL as well, which has gained for the first time in about 3 days. So good going for the OMC names, and we were just chatting with Mr. Sharma about the prospects of this particular sector.
Ramesh, closing comments from you. As we speak, it is Q1 FY15. Your current book is about 35,000 crore. After 3 years, what could be the size of your total book?
Little too long, but even this 35,000 crore that we are talking of, last year something very strange happened. Even for the same volume of business, the disbursements were low because there were discounts of 10% almost on all vehicles. So if the discounts vanish, and even if price increase don't happen, and if the volumes remain constant, I'm saying even if volumes don't go up, just the discount vanishing is one trajectory of growth one must look at. And then of course all of us are talking about volume increase possibility, and for us particularly in rural India, we are going very deep. Last year we added 200 plus branch. I think we're continuing to add more branches in the first quarter. We've added about 30-40 branch already. And I think even in this year going forward, we will really penetrate deeper. So honestly, growth is something that's never worried us from this market. Opportunity is too large. I think we are not a very significant player yet in this market, even at this size. So I think one shouldn't really look at what that number looks like. But I think if you were to ask me the trend, I would think growth will continue in this market with the kind of strategy we have put in place.
A breakout in BPCL as well, and that is now nudging the green line as we speak. But Ramesh, always good chatting with you. Let's just bring up the stock as well and show you how it's panning out right now. That's BPCL in trade, and Mahindra Finance too would just come up for you on your screens. Where's the stock right now? That's holding firm up by about